Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be my friends. I'm just trying to make you a little money. My job is not just to educate, but to teach and entertain. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. So the big bad bill, a.k.a. one big beautiful bill, has passed the House, headed to the Senate. And all I can say is, enough already. We all know it's driven up interest rates. No one seriously claims this plump, pulchritudinous legislation cuts the deficit. So it's also no surprise that the market didn't do much today, with the Dow dipping 1.4%. 1.4 points. The S&P edging down 0.04%, and the Nasdaq actually gaining 0.28%. That's what happens when you go out with a bang of banter and exit whimper of windbags. In fact, this bill's ultimate passage was so obvious that even the bond market didn't bother to recoil. Interest rates actually did the unthinkable. They went down. And if anyone in the House even bothered to read the bill instead of just seeing how much their constituents could beg from it, they would have realized that there are many pro-growth provisions in here. We only talk about the SALT deductions, Medicaid cuts, but there are things in this bill that should entice businesses to spend fortunes, while families will be able to put money away for newborns. This is a super-duper stimulus package. Maybe it'll help our country grow its way out of our balance sheet worries, but maybe not. At all times like this, though, when some huge, ugly event is at last over, I like to survey the battlefield and see who actually advanced from our trench through no man's land all the way to the enemy's trench. I try to imagine it's the first day of the Psalm and see who got across. Weirdly, when I looked, I was shocked to find really a couple of companies, but really only one major company nobody's talking about, braved the machine guns, avoided the sheets of steel, and cut through line after line of barbed wire to come through unscathed, or maybe even stronger. And that company? GE Vernova. That's right, the one-time red-headed stepchild of the old General Electric before it was spun off as its own entity. Look, they could have called it GE Power, but I guess somehow in some alternate universe, Vernova sounded better. Hey, I've seen worse naming decisions, like the guy at Warner Brothers who thought that Max would be a better brand than HBO. Oh, by the way, and WBD's opponent, Netflix, is doing pretty well, too. But everybody knows that. I say, who cares? GE Vernova is the unknown soldier, okay? The one that got to the other side and I think is going to keep going. And that's what matters. So how the heck did it make it across no man's land, and why am I so confident that it's going to keep going? Okay, GE Vernova is at the heart of every major power trend there is, except solar, which is lucky, because the solar stocks got eviscerated today by the big, ugly bill that just passed the House. Consider the trends that this one stock embraces. First, the nation's sagging, aging, ossified, pathetic electric grid, which was built for a country that had forgotten how to grow. Well, GE Vernova is trying to fix that. See, they make turbines. Now, I know it's spelled Turbine, but it's pronounced turbine. These turbines generate electricity from burning natural gas. For a long time, our demand for electricity was barely growing, so the utilities didn't feel much pressure to order new equipment. Actually, let's just put it this way. The turbine business, it was disastrous. I mean, they were getting killed. And it really just amounted to a servicing enterprise. Then one day, Jensen Huang's NVIDIA created a semiconductor monster that says, feed me, while it produces knowledge. It's a generative intelligence machine that eats more electricity than anything ever come out of Silicon Valley, times 10. When you hear data center, you should be thinking it's synonymous with the turbines needed to keep the lights on. These things are insatiable. Let's hope the Little Shop of Horrors metaphor doesn't only go so far. There's a very good chance that the hyperscaler data centers, Google, Amazon, Meta, CoreWeave, power guzzlers all, get their electricity by burning natural gas with GE Vernova's vast engines. And in the future, they might be buying from nuclear plants that's also, of course, run on this company's technology. So how do we not know of this gem of a business before? Simple, because it almost didn't happen. GE's power division was a cast-off when the brilliant Larry Culp took over as CEO and decided to break up the entire company. In my many meetings with Larry, he'd always promised me that one day this division would stand on its own. I always chided him that he should just cut his losses. Visionary that I am. And then the data center came along. Suddenly, our nation's stagnant demand for electricity started growing at a 5% clip. Oh, my. Buy. And so, of course, to GE Vernova, which had been living hand to mouth, and now has more orders than it can handle. It's just an incredible transformation. I guess Larry got the last laugh. That's trend number one. Trend number two, These monsters can cost up to $50 million. If you have a trade surplus with our great nation and you would want to make nice with our government, you used to do it by picking up some planes from Boeing. Even the smaller 737 MAX goes for about 55 mil. Yeah, a throw. Right now, the world is shaking at President Trump's edict that our trading partners better pay up or suffer the consequences. Now, if you don't need planes, you got something else you can buy. GE Vernova turbines. Given that the president wants these countries to build data centers, it's an easy call to order some turbines. That way, they can say that they're shrinking the trade surplus pronto. Two trends. Okay, not enough for you? Did you see the other day that TVA, yes, the old Tennessee Valley Authority, submitted the nation's first construction permit application to build a small modular nuclear reactor? And who has that contract? The only company in America that can build nuclear power at scale, GE Vernova. Anything nuclear has been red hot in recent years. The people who buy quantum computing stocks and flying car stocks and Palantir, also GameStop, have bought anything nuclear too, to the point where they're practically meme stocks. There's just one problem. The meme nuclear stocks are so overvalued that it's painful.
The House of Pain.
But not GE Vernova. It's a real company. How refreshing.
That was easy.
In the old days, when I was a hedge fund manager and I saw a stock like this, I wouldn't even bother examining it. I might not even care that it's going to do 36 to 37 billion in revenue, 2 to 2.5 billion dollars in free cash flow. I just try to figure out how big the opportunity might be and then work backwards. I think the nat gas for data center and nuclear opportunities are some of the biggest out there. And GE Vernova dominates both of them. So the tariff avoidance theme, they got that too. I was a skeptic about nuclear power because the CEO, Scott Strazik, told me I was too bullish about it when I interviewed him back when GE Vernova came public. Scott's not dissuading me anymore. The opportunity's now. And after I traced out the opportunity, I put a price tag on it. That's what I would do at the hedge fund. Then I'd look at the company's current market capitalization and puzzle over it. What was it really worth? How about that disparity? As I said yesterday when Jeff Marks and I ran the CNBC Investing Club monthly meeting, which I wish you would listen to, the possibility of what could go right at GE Vernova is so incredible that the stock's value just can't measure up to the opportunity. The bottom line, no wonder when I surveyed the battlefield, I could only find one soldier left standing that I like, one that fixes trade surpluses, restarts a new nuclear trend, and solves the conundrum of powering the data center and firing up the growing electric grid. GE Vernova is made for this moment. This is the one big stock that survived the making and passing, at least in the House, of that big, beautiful bill. And I bet it keeps winning. Mark in Iowa. Mark.
Hey, Jim, that was a very informative meeting yesterday, and I was able to take advantage on the trade alert today in a small way.
Oh, excellent. And we should have another one tomorrow, so stay tuned. How can I help?
Okay, I'm calling about a company that has a big footprint in my hometown of Waterloo. They reported in early May had a flat top line from the same quarter of the previous year. They had margin expansion. Their EPS, adjusted EPS, was 92 cents, exceeding estimates. But their share price has fallen from the $62 to $64 range to the mid-50s now. It has a 4% dividend, but is it going to get involved with the new processed food fight? Where's Tyson going to go?
That's a tough one. You know, I've always felt that Tyson should be much, much higher, but it doesn't have the earnings power for me to be able to say that. I think you got to. I think we're going to put this one on hold. I don't see it presenting ourselves any great opportunities at this very moment. Now I want to go to Brian in Oregon. Brian.
Hey, Jim. Thanks so much for the education on the bond market the past few days. I learned a lot.
Sure, trying. Thank you. What's going on?
I've been holding the stock all the way up and down through the pandemic. It's down 83% from the 52-week high with a 16% short interest. It had a recent pop in the past week. What do you think about Moderna?
There's got to be some value in Moderna. There just has to be. But I've been against this stock for so long. I first discovered it at 18. Maybe that should be the price target. A stock like GE Vernova is the one that's standing out right now. It's got multiple factors going in its favor at a time when everyone else seems wary about the big, beautiful bill. Well, Man Money tonight, Williams-Sonoma took a dive today despite an earnings beat. I got the CEO to hear if this pullback could be a great time to buy. Then could Live Nation be music to your money's ears? I'm seeing if you should have a front row seat to the stock. And later, from aging to GLP-1s, I'm getting looks at the medical space with cardiologist and author Dr. Eric Topol. So stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. Hashtag Mad Mentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.